Welcome to Investors Insights. Our topic today is where the money flows. And on this Memorial Day, we want to recognize those individuals and those families who have sacrificed themselves, given their lives for our freedom. And as we celebrate freedom today in honor and in their memory, we want to remember one of my favorite quotes from Ronald Reagan is freedom is never more than one generation away from extinction. We didn't pass it to our children in their bloodstream. It must be fought for, protected, and handed on to them and for them to do the same. Or one day we will spend our sunset years telling our children and our children's children what it was once like in the United States where people were free. We thank those who've sacrificed their lives. We thank those families who've lost loved ones. And we remember you today on this Memorial Day. And with that, let's talk about a week with a holiday, as well as 4 days of markets here. I had a great meeting with you gentlemen, Bobby Norman and Trey Booth, good debates. And also, I need to say this, that as we start this discussion, it's not the end of the discussion. We will continue this dialogue and discussion throughout the week in our social media and on our podcast, Facebook, Twitter, LinkedIn. And so we've got a lot of data to share with you this morning and as the week progresses. So with that, Bobby, great information comparing real estate to the stock market. That's been a topic that we're hearing a lot about. Talk about that.
Yeah, Greg, I had a conversation with a client last week that I want to share today, and it revolved around having money in real estate versus the stock market. And look, it's no secret that the real estate market is really hot right now with lower rates and then also limited supply. And it is a great time to be a home seller, as we saw single-family homes had their biggest price increase on record in the first quarter of this year. So what I want to do is I want to compare real estate to the other main source of U.S. homeowner wealth, and that's in the stock market. As you can see in this chart, that going back to 1990, the home price index has gone up a respectable 200%.
You had my full attention with that.
Yeah, that's a big number. But that actually looks quite tame compared to the 1,000% return from the S&P 500 over that same time period, so about 30 years.
Yes.
So while real estate, yes, it does offer a way to, one, diversify assets and create wealth. But the stock market has been a better source of increasing U.S. homeowner wealth over the past 30 years. So again, for those that are wondering, should I have my money in real estate versus the market? Based on history in the past 30 years, the stock market has created significant more wealth for people than the real estate market. So no guarantees, but this is something we wanted to look at.
Yeah, no, I thought that was great insight. Excellent data that you put together there. And Trey, you also surprised me this morning from the standpoint of how you were analyzing institutional money flow as well as retail. That's where we came up with our blog topic in terms of Bobby's information. Where's the money flow? You go real estate, you go stocks. And from your standpoint, talking about where does the money flow in relation to institutional money versus retail money. So talk about that.
Yeah, some fascinating information we got from one of our research partners, Strategas, about the money flows and money markets. And that's really an indicator of investors having cash available to invest. Now, the stock market, we talk about this all the time, is a supply and demand indicator. If there is more demand for risk assets, then prices will go higher. And so that demand comes from cash. And so something that you can see in this chart going back to January of 2020, during the peak of the crisis, both institutional and retail investors flooded to cash to protect their assets. Since that time, both have decreased their cash holdings and put money in the market. That's why we've seen this big rally in equity assets. However, starting at the beginning of this year, there's a big change in where you see retail investor, the individual investor, has really started to greatly reduce their cash holdings and really participated in the continued rally in the market, while institutional investors have gotten much more defensive. And so this is actually a good thing because the institutional part of the market is much larger than the retail investor. And so this gives us an opportunity that there's more money on the sidelines that can be put to work to push prices higher. What we often see is retail investors are much more skittish. And so if we get a pullback in the market, it's usually the last money in, first money out. So the hot names, the hot
Very
investments really roll over and collapse really quickly. And so what's there to pick up the pieces is a much larger institutional investment base with a lot of cash. So if we see a rollover in the market, it's likely a buying opportunity for institutional investors and individual investors that may want to follow what is called, the smart money. You'd say that it's not very smart if the money hasn't been in the market this year, but we digress. However, the smart money does have, as it's called in Wall Street, does have cash to put to work. And that's a very positive point for continued potential rallies. Not saying, like Bobby pointed out, the market over long term goes up. You can see on Bobby's chart that the market definitely doesn't always go up. So they're not saying it's definitely always going to go up. But if there is a pullback, it's good to see there's cash available to buy that pullback.
Yeah, and that's excellent data, and it really complements what we've been talking about in several of the vlogs before this one. Just talking about the volatility in the market, that we could see, a pullback, which can sometimes be very healthy, and also gives everybody a perspective of where that money can flow to. Should we see those dips?
Yeah, sometimes it's good to have the pause that refreshes. As we're celebrating our Memorial Day holiday, the market it's probably healthy for the market to take a holiday for a little bit.
Well said. In fact, I don't think I can end this vlog on a better note. So with that, we hope you have a great Memorial Day. We hope you cook out, you get with family, friends, and just enjoy yourselves as we celebrate our freedoms and in memory of those who have served our country. Take care. Have a great week. Listen to the rest of our information this week, and we'll keep you updated. Happy Memorial Day.